Reserve Bank Governor Lesetja Kganyago had been hinting for a long time in various interviews and presentations that the bank was keen to bring down the inflation target, lamenting that it had not been brought down sooner in recent years. And on Thursday, he announced that the Reserve Bank would no longer focus on the midpoint of the 3 to 6% inflation target band, but rather focus on the bottom end of that target going forward, that being 3%.
Their argument is that 3% is still within their mandate of 3 to 6%. However, there is also a discussion in the background about a potential change of that target away from 3 to 6%. So Treasury ultimately will make that announcement on a potential change to the target, which may be the 3% point target that the Reserve Bank would like to see, or it may again be a range that would potentially be slightly lower than the 3 to 6% that we've had over the last number of years. But the bottom line for now is that inflation is benign enough to create scope for the Reserve Bank to potentially provide further monetary policy relief to the economy.
While there are practical reasons why the Reserve Bank feels justified in targeting 3% now, Finance Minister Enoch Godongwana said the Reserve Bank's announcement had created an expectation that he would make a firm announcement around the inflation target at the upcoming midterm budget policy statement, but sought to set the record straight that that would not be the case. This statement suggests that the Reserve Bank may have jumped the gun a bit, or did it?
I think the Reserve Bank has earned the credibility, let me say, to do this kind of move, because they have handled the values around as well as inflation rate over the last several years quite well. And if they think they can get it to 3% and keep it there without too much cost, I think that is something that we would think is likely to be true.
Labour says it understands the Reserve Bank's push for lower inflation, given its negative impact on economic activity, saying it's a debate it would be willing to engage in, but it suggests that the timing of bringing down the inflation target may not be appropriate.
I think our fundamental concern really is about if you set the repo rate, the inflation target rate, which is currently between 3 and 6%, to be below 3%, then the mid-range becomes 1.5%. So there's a significant fall from 4.5 target to 1.5 target, presumably. Our fear is that the economy, number one, has been growing 1% for the past 17 years. We have a 43% unemployment rate. We have a 72% youth unemployment rate, an economy which is really struggling. We are now heading for very dangerous, turbulent waters where we may see many companies retrenching, even closing, because of the 30% tariff duties announced by the US towards South African exports. And so we can't afford this shift now.
While discussions around the new inflation target between the Reserve Bank and National Treasury were said to have been at an advanced stage ahead of Thursday's announcement, National Treasury's subsequent statement calling out the central bank means that a formal decision on the same may be communicated at a much later stage, especially if the concerns of Labour are taken into account, that this may not be the right time. Nampumelo Siziwa, SABC News, Johannesburg.